Welcome to the Transfer Pricing Method, the podcast where we break down the complexities of transfer pricing with top industry leaders. My name is Adriaan van der Heijden and I'll be hosting today's discussion on transfer pricing controversy. Today I'm joined by two well-known guests within the transfer pricing world. First we have Katrine Ernest Haunstrup. Hope that I pronounced it well. She's the country lead of Censio tax in Denmark. With 20 years of experience in transfer pricing, Katrine brings a dual perspective to the table. Her background spans senior advisory roles in the Big Four and in-house positions at Danish multinationals such as Ørsted and Maersk. Katrine's expertise covers the entire transfer pricing lifecycle, from strategic planning and global implementation to managing TP controversy in her previous role as head of TP controversy at Maersk. Joining us as well is Emile Monfils. He's one of the managing directors of Quantera Global with approximately 20 years of experience in the field of transfer pricing, and is known for his extensive knowledge and experience in the field of controversy and also intangibles, but also for his endless humor. In today's episode, we'll be exploring transfer pricing controversy management, so let's dive in. Katrine, how do you come in the situation of a TP audit?
Hi, Adriaan. Yeah, there are many ways that a company can find itself in a TP controversy. There are one of the ones that we see a lot these days are due to inconsistencies. The tax authorities, they have a lot of tools these days at their disposals, meaning that they have tax return information from us. They might have CBCR reportings. They might have DAX 6 reportings. They have our documentation, transfer pricing documentation. And they, of course, also have the tools to compare those documents and that information. And if they see inconsistencies, for sure, that's a red flag. There are also audits starting out as corporate tax audits, for example, or other tax audits, which then eventually evolves into a transfer pricing audit as well. Then in Denmark, for example, the tax authorities, they have their focus areas. For now, they're looking into restructurings, financial transactions, material transactions. So if you have intercompany transactions that falls within those categories, you're also a good candidate for being sought out for an audit. And then across the world, it differs. Some jurisdictions, they have different programs whereby they periodically seek out taxpayers for audit. You see that in Latin America, for example. Spain has it. So it really depends. And I think one question I get a lot is, so how do I avoid getting myself into an audit? And I would say that's perhaps not even the right question to ask. Because eventually there is a big risk that you will end up in an audit, even though you got your house in order. But preparing for the audit is what is interesting, in my opinion.
Okay. And I think you also mentioned like specific transactions, such as intangibles, financial transactions, Katrine. Are you aware of also specific teams within the tax authorities that deal with these topics, or is that all dealt like a generalist, basically?
So we do in Denmark, we do have a team which is looking after valuation and financial transactions, and the rest is dealt with the general team.
Okay, yeah, thank you. Emile, do you have anything to add? So why do you end up in the situation of a transfer pricing audit?
Well, thank you, Adriaan. Yeah, Katrine already mentioned a lot of potential situations in which you can then end up in a TP audit. I do agree. TP audits often start with the assessment of the corporate income tax return, financial results not being aligned or expected by tax authorities in that sense. So, for example, we have year after year a loss-making company. What is the reason for it? But also a lack of compliant TP documentation might also already lead to a situation of TP audit, or at least tax authorities asking questions. Sometimes you see TP documentation that is, although perhaps compliant with OECD requirements, it may provide certain, let's call it red flags, which might caught the attention of the tax authorities.
Okay. Any tips to avoid these red flags and perhaps also avoid audits in general upfront?
Yeah, so indeed, preventing is better than curing, I always say. But it is a very, quite difficult, of course. Of course, we as TP experts know best how to prevent an audit in that sense of preparing decent TP documentation and getting the storyline in line with the results. Because now it is from tell me to show me indeed that what you have written in on paper is correct, has been correctly applied, implemented. So already thinking about what do I put on paper? Do I not already provide red flags in that sense? And knowing the risks, of course.
What would be a typical red flag, Emile, in this regard?
Well, so Katrine already mentioned one of it, but you often see business restructurings, including transfer of intangibles of IP. That is a part of how that should be included into the TP documentation. But if you do not have any other information to substantiate, for example, the value of the IP being transferred, is there something being transferred of value, you might already expect questions. So one of the items to make sure you prevent it is to have decent documentation in place. To keep it at least in your file, and although it does not really need to be included in TP documentation, for example, you might already prepare it when you already have all the facts and gathered.
Okay, thank you. Katrine, do you have anything to add? So how can we best avoid an audit?
Yeah, so as said, I think it's difficult to avoid audits altogether, but we can definitely do a lot to prepare for audits. And I would say it really starts much before we actually get into the actual audit situation, because it's when at the time of the transaction, when we carry out the transaction, that's when we really have the chance to impact what will happen down the line. So it's about getting the policies right. And as Emile just said, it's also about having processes in place which are solid, because it's a lot about don't just tell me, show me. And if you have your policies, if you have good processes, then you are very far in your journey in terms of being able to document that things are correct. And then if you want to kind of put a nice bow on it and seal it, if you also have good processes for follow-up, good controls in place, so that you, whenever your transaction is carried out, that you check that it's implemented correctly, that it was executed correctly. And all of this even before you get to the documentation part of things, because then your transfer pricing documentation is maybe not easy to prepare, but at least you're giving yourself the very best starting point.
That's actually a good question. I also have, Katrine, so perhaps the next topic will be the transfer pricing documentation itself. But before that, so internal policies as such. Obviously, not all internal policies are written for tax and transfer pricing purposes, but do you see any risk in that regard, or should you always write something specifically for transfer pricing based on such a business policy?
I'm not saying you always should write something for transfer pricing, but I definitely think whatever you have, do also consider transfer pricing. So if you do a policy, then, I mean, I always make an effort, or I used to when I was in-house, make an effort to be where the decisions are made and where the transactions are kind of being planned and implemented and executed. Again, because that's where we can really impact it as TP experts. So the more say we can have in how we do things, what the process should look like, the better.
Okay, thank you. And then perhaps diving into the next topic, so transfer pricing documentation. Often I hear the words audit readiness and audit-ready transfer pricing documentation. Can you perhaps tell me something about that, Katrine?
Yeah. So I guess it's a good question. I don't have the answer to what is the perfect transfer pricing documentation, because as always with transfer pricing, my opinion is it depends. I think a lot of people always approach the question from, should I do a small size documentation or should I do a big size documentation covering everything? And in my opinion, both things can be equally good. It depends. Sometimes less is more, because then you don't say anything wrong, that's for sure. But you can also then have this discussion afterwards with the tax authorities when you know which direction they're going in. On the other hand, if you say less, then 5 years down the road, maybe you've forgotten some of the facts. Maybe you cannot dig out the data that you need. If you put that in from the beginning, I mean, you covered the transaction. So I would say what is really important is that you have the right narrative. That's what you need to be on top of. And that's what makes a good transfer pricing documentation. That it is consistent with what is going on, is consistent with the data you provide, but also it's consistent with the way that the company does, or the group does business, so that it supports the way that profit are allocated within the group. That's a good transfer pricing documentation, in my opinion.
Okay. And should it follow a specific format, or I think we have the OECD guidelines, for example.
Yes, Adriaan, obviously, of course, looking to the guidelines. And I must say, I'm traditional, so I basically just follow the recipe. But again, where you should put your efforts and your weight depends a little bit on what type of group you have and what your facts and circumstances are. I often see transfer pricing people miss the opportunity when you talk about strategy, for example. That's a nice place to maybe address some outliers from the country by country reporting, or to address the setup in the group in general. And I must say, I oftentimes see that just the corporate strategy, for example, is being copied or whatever it is. That's one place you can do a little bit more of thinking on how you support the group and the transfer pricing.
Okay, thank you. Emile, from a Dutch perspective, anything to add?
No, I think from a Dutch perspective, we also have the TP documentation requirements that should be fulfilled by taxpayers. No, I think perhaps looking at TP documentation, and it might be a misperception. I hear people say, well, I have my TP documentation in place, so I'm in control. That is something to look into, I would say. What I do see is that if you really have a decent TP documentation in place, it should be representing the business model as such. Normally, I also will see cases where TP documentation in place and the business model is described previous years, but has changed. And it's not taken into account in presenting the facts and circumstances, because a tax audit is often about the facts and circumstances and the misperception or different perception of these facts and circumstances. So if you're able to really explicitly and concretely put things on paper and describing the facts and circumstances and getting the storyboard right, it should be audit ready. Again, also, TP documentation should help you justify the chosen TP method, the strategy, the policy.
Okay, thank you both. I think we also have something specifically called reversal of burden of proof in the Netherlands, Emile.
Yep.
Do we also see specific court cases basically saying that the taxpayer had insufficiently prepared its transfer pricing documentation? That's why they have to prove that they're right? Or is that something that's still not coming up a lot?
No, we do see indeed, Adriaan, case law exactly on that specific topic, stating, okay, well, TP documentation was insufficiently in place and provides a sufficient reasoning for tax authorities to take a certain position, but also into court. So indeed, yes, a lot more and more cases are now coming up on this specific topic, because when you have the tax audit, TP documentation is used to present the situation at that time. And TP documentation is to document the past and not so much the future. And so you cannot change the past anymore in that sense. You can still use it in order to set a good base for the future. But facts are facts. And how do you interpret these facts? And what kind of impact will it have on the financial results?
Okay. Emile, perhaps to continue with you, when you're getting an audit request. So basically, I think what we've discussed before is anything you can do to prevent an audit. So proper TP documentation, but also our tips such as Katrine shared with us. But now the tax authorities are basically putting their wheels in motion and want to audit your business. What to do next?
Yeah, so I would suggest the first step is to call your TP advisor. And that will be the first item to do. Now, because when the TP audit starts, you may expect various questions of tax authorities, either during a meeting or already on paper. And you do want to understand the materiality of this TP audit, the potential impact it might have. And so you don't want to be already very hasty. You will need to ensure that you have sufficient knowledge on what is the topic of the TP audit. And based on materiality, you will also look at, okay, you need to do your stakeholder management. Who do I need to involve from an internal point of view within the company to be able to at least answer the questions sufficiently of the tax authorities, but perhaps also to see the external stakeholder management is also something that's quite important in the preparation of a TP audit.
Great. Katrine, perhaps your view on this topic.
Yeah, definitely agree with Emile. One thing which is also important to look at here, I think, is our own evidence, our documentation. So looking to what we will have to discuss with the tax authorities, taking a view very early in the process, when we know our position, then also looking at the facts. So can we document the position that we have? Can we show the tax authorities? Because it's so, I've seen that in real life, and it's a big problem once you've gotten down one route, and then all of a sudden you have to show with data, and for whatever reason you don't have the data that you expected to have. And at least in my experience, that data is very often an issue. So it's a very good idea to also check very early in the process if you can prove your position. And at the end of the day, especially if we make it through a tax audit and we end up in the courts, then we won't be right if we can't document our position. And I think more and more that probably also goes in the tax audits as well. If we cannot document it, it's almost like it hasn't happened.
Yeah, I think that's a very important one, right? So making a statement is easy, but actually backing it up is the difficult part.
It really is. And before I went in-house, I was always surprised when the clients told me that they could not get one piece of data or another piece of data. And I was thinking, how difficult can it be? Having been on the other side of the table, it can be very difficult. I'm continuously surprised, I must say. And also then, it's not that long ago that I've been in audits where data was there, but data was not static. So data was in fact changing along the way, even years after the fact. Data was still changing because that's how the systems work. there are so many things to consider when you go into a tax audit on the data side of things.
Yeah, that's actually a good topic, Katrine. I think you have quite some experience, also given your previous position as head of TP controversy. Do you have any tips and tricks for the listeners what to do?
They are all very boring, I must say, because it goes back to preparing. So no, maybe not just preparing. So one thing is preparing, definitely. At the time of the fact, so when the transaction is being carried out, make sure to save your files. It sucks, but I don't see any way around it. But then also one important point is make sure that you have the people extracting the data on your side internally. So, I mean, spend the time, spend the resources to sit together with the people managing the data and make sure that you can extract what you think. And again, do this early in the process so that you know exactly what you have to work with, or at least have a good idea of what you have to work with, and then manage your audit based on that.
Okay. Emile, anything to add from a Dutch perspective?
What to do or what not to do? Well, I think it's more of a general thing. I would say be proactive, be constructive. In most cases where, at least in all cases where I've been involved in, you try to make the situation understandable for the tax authorities and to see what a decent result should be. And so you will need to work together in that sense. And I'm quite happy to say that Dutch tax authorities are willing to cooperate and to be constructive and to see, okay, what indeed is in line with the business model. Because I think Dutch tax authorities also want to prevent double taxation situations, because, well, then you might have to go into an MAP procedure and a lot of effort, money, financial. It all has a very big impact also on the organization itself. So, and especially I would say, don't be over hasty. That is exactly what not to do. Be over hasty. I do understand you want to be the TP audit over with, have a quick result in that sense, but you will need to take your time to ensure that everything that is being presented towards the tax authorities is correct. And as Katrine mentioned, can be backed up with the data. So before already answering the questions of the tax authorities, be sure that you can back everything up with documentation, with data, financial data, to ensure that you do not have to come back at a later moment to state, okay, what I said and what I stated was not entirely correct.
Yeah, and how would you see this? For example, tax authorities are coming with a specific request, and I think when you check the data, your conclusion may also be that they might have a good point. How should you deal with things like that, where you actually know that what you as a taxpayer could have done? Yeah, you could have dealt with this in a better way, and they actually notice it. How should you deal with topics like that? Because that's obviously more difficult, right?
It's quite difficult, but I think one of the aspects of having a decent TP audit is also making sure that there is a decent process in place. So from my perspective as a TP lawyer or a TP expert, I do need to make my client aware of the potential risks I see and to make them understand, because it might affect the outcome of the TP audit. So during this TP audit, my stakeholder is also the client, and in getting to ensure that he or she understands what the risks are, what the impact may be, and which kind of scenarios are in place.
Yeah, and yeah, okay. That's regarding perhaps also the information I shared, you also have something like penalties. I'm not sure if there is there any difference between the Netherlands and Denmark in this regard. So when can you actually have a penalty assessment from the tax authorities? So perhaps Katrine, you can start from a Danish perspective.
Yeah, so that's the good part about transfer pricing documentation in Denmark, because if you have your documentation in order, then you basically have penalty protection. So that's a very good news. If you don't have the documentation in order, that's a whole different situation. You will be penalized. And as things are today, where you have to submit it in Denmark, you will be automatically sent for penalties if you miss the deadline. So, but on the bright side, penalty protection.
Okay. Emile, anything to add from a Dutch perspective?
No, I do see, and there are cases where penalties should be applicable or are applicable, but I do also see that TP documentation in the Netherlands, you do not need to actively file it. You need to have it in your administration, and it's also assumed at the moment of filing the corporate income tax return, your TP documentation is in place. That being said, there are still cases where taxpayers do not have this TP documentation in place or in their administration, and well, TP return of the corporate income tax return is filed. If there are questions, if you are lucky, tax authorities may give the taxpayer the opportunity to again prepare within a certain deadline the necessary TP documentation. So I do not want to say, well, just wait and see, and you do not need to prepare NTP documentation. You may see it as a last resort in that sense, because, well, you do definitely need to be prepared. And at the moment of preparing TP documentation that relates to a specific year in the past, it might be the case that you are perhaps new in the company. A lot of people have already are away, and so gathering those facts and circumstances will be very difficult and very time consuming.
Yeah, I agree. And yeah, perhaps also good to have some sort of tax control framework in place, but that's, I think, a topic for another day. Okay. Yeah, I think that's it for today. Let me try to summarize what we've discussed, and please feel free to add anything afterwards, Katrine and Emile. So I think more audits are happening recently, also given that the tax authorities have more information available, such as corporate income tax return, DAX, CBCR, TP documentation, local forms, etc. Yeah, it's good to potentially try to prevent audits by preparing transfer pricing documentation and at arm's length pricing at the time when the transaction is actually carried out. And so upfront, basically, but also preparing robust transfer pricing documentation after the year ends with the actual figures. You also have to show that what you have written on paper is also correctly implemented. I think that's a very important one. Sometimes may prove to be very difficult. High risk transactions you could consider for additional documentation and defense files, basically. And yeah, what we've already discussed. So when a transaction is being implemented, please already consider the transfer pricing considerations. Then I think the third topic, audit-ready transfer pricing documentation. Yeah, you can basically make a distinction on very elaborate documentation or brief documentation, and really depends on the facts and circumstances what may better work for you. Use it to give the right narrative. Sometimes less may be more. But on the other hand, sometimes that may also trigger you 5 years later when actual discussions occur and you perhaps do not have all the facts and circumstances correctly represented. Another topic discussed in court as well is the reversal of burden of proof. So it's actually very important to check the box on your transfer pricing documentation compliance. Then when transfer pricing audit actually starts, do not be too hasty. Ask your transfer pricing advisor already before something is shared with the tax authorities. Sometimes a specific sentence may not seem that harmful, but may kick you back in the face during the audit. And also look into your own evidence and documentation. So what position are we actually in, and can we prove our statements? And then finally, some tips and tricks. So data gathering and management is crucial. Sit together with the people that actually manage the data before proceeding. Have insights on who you're confronted by and what they might be after. Try to make the situation understandable to the tax authorities, because sometimes a question may pop up that's not really judgmental on your side, but they just want to know more about some specific transactions. And finally, if you have proper transfer pricing documentation in place, at least in Denmark, you already have some penalty protection. Did I miss anything you would like to add, Katrine?
So if I can leave the listeners just with one more thing, it would be to consider the audit strategy in the process. So I think it's a very good idea to know early on where you want the tax audit to end up. Is this something that you would like to have settled? Is it something that you just need to have solved for double taxation purposes? Or is it something that you want to take all the way if the tax authorities do not agree with you? Because that will also impact, or it should probably impact, the way you manage the audit and the way you communicate. So I would definitely recommend that you always take the time to always consider where you want to go with the audit. And then maybe you have to be flexible and reconsider during the way. But
Okay. Emile, any final remarks?
No, I think most important takeaway from my side is just be prepared. Don't be a sitting duck. Don't wait until the tax authorities come knocking on your door and you have to, in panic, need to do all those stuff that you should have done. So please be prepared and always keep in mind, tax authorities might knock on the door much sooner than you really think.
Okay.
good advice.
Thank you, Katrine and Emile, for contributing to this podcast. That's a wrap for today's episode of the Transfer Pricing Method. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with your network. For even deeper insights into transfer pricing strategies, industry trends, and expert analysis, make sure to subscribe to our newsletter. Thank you for listening in, and I'll see you in the next episode of the Transfer Pricing Method. Bye-bye.